Well, Cummins India's numbers were much ahead of estimates, and especially after the commentary that had come in from the parent, a bit of a surprise as well, which is why you saw the stock do what it did in trade yesterday. The idea of interviewing Mr. Ashwath today, though, because we didn't want to just talk about the quarter. He's had a stellar run in Cummins since he took over. In 5 years, circa 5 years that he's been at the helm, he's doubled revenue, tripled turnover, tripled profitability for the company. And the idea would be to talk, yes, about the quarter and what could happen in the year, but also about what's next for Cummins and for him. Mr. Ram, good having you. Thanks for taking the time out. Hope all is well.
All good, and thank you for having me on the show.
Our pleasure is ours. I'll start off with what happened in the quarter. So ahead of numbers, exports, even though a smaller percentage and even though it fell, was ahead of estimates for sure. So I want to break down domestic and exports and start off with exports because they did better than estimates. Looking at the world, it doesn't seem like growth is back with a bang. If anything, growth might be slowing down. How do you look at what's happening to world growth and Cummins India role within that, therefore?
So, as I indicated in the last quarter, we have seen the exports markets dropping for a few quarters, and when we started looking at the order board, etc., we began realizing that we seem to have bottomed out in the previous quarter, and we were expecting things to start go horizontally or start to pick up. And so we saw a little bit of pickup, mainly come from the Middle East and some parts of Africa, and the rest of the world is, pretty much flat at that bottomed out kind of level. Still geopolitical problems, new problems with Israel and Iran, all of those kinds of problems continue to wreak, havoc in terms of predictability of how and when the markets will recover. China still doesn't seem to be recovering like one would have expected. So the outlook is a little bit muted for things picking back up. I think it'll take a couple of quarters at least before we can see that happen. But we continue to leverage the work that we have done in the past, the introduction of new products, introduction of more variants, getting into the markets where we have lower market share and trying to improve our market position. So even though there aren't green shoots from a global economy, we are still trying to leverage our good position with product from India to try to, grow the export side of the business. As far as the domestic side of the business is concerned, the only downward blip this quarter is because of the transition from CPCB 2 to CPCB 4. Actually, it's very, very good news. We see a very strong order board. We do see demand continuing to remain strong in the India market, even though we've already had 2 strong years of growth in power gen in India market. And typically, it's a cyclical market, so at some time you would see some level of correction, but we are not seeing it right now because the economy, the Indian economy is strong and demand for infrastructure is strong. So we are actually seeing very good demand from the local market.
So you reckon that will continue, and part 2 of my question would be the fact that the CPCB 4 prices, I presume, have increased 15-20% versus CPCB 2. So does that help both? I mean, of course it helps top line, but does it also help your gross margins to do what maybe they did in Q1, because Q1 gross margins look very, very strong?
See, Q1 gross margins and the last 2 quarters, we've experienced this phenomenon of having this perfect storm of having the better pricing, having commodities remain weak, and getting good leverage out of cost reduction activities that we have been doing continuously. So, and a good mix as well. So combination of all of those things are what have led to these, record levels of profitability. While all variables may not go the same way in every quarter, but I think overall the movement from CPCB 2 to CPCB 4 is accretive to Cummins, because not only do we increase the amount of content that we produce, so the product is more complex. There's a bigger share of the pie itself has become bigger, and we have the opportunity to get a bigger share of the pie. So that combination, I think, is beneficial to Cummins to be able to continue this journey.
You sound constructive on demand, on your ability to execute that demand, and hopefully on even maintaining margins, despite the fact that the previous 2 quarters you've been also in the midst of some good things, and not everything may continue. But you still sound constructive on both demand and margins.
Demand, because India's demand as a nation continues to grow because the GDP is growing. And if the ambitions that we have to become a 7 trillion nation by 2030 are to be executed, then the investment in infrastructure will have to continue. And when that investment in infrastructure happens, pretty much every market segment where that money goes into, Cummins has product to sell. And that's why we remain pretty optimistic that the demand will remain strong from an India perspective. And we have some real technological advantages. These are products which Cummins has released in other parts of the world, and where we have a leadership in terms of the kind of technologies we bring into these products. And so that's what gives us the confidence and the optimism that we're not playing in just a commodity market. We are playing in a market where technology can differentiate, and whenever emissions have become tighter, whenever technology needs are higher, Cummins globally has always been successful. So that's what gives us the confidence that going forward we can maintain and even build on what we have done so far.
One would have thought that with the this whole disruptions, Red Sea, etc., geopolitics, so on and so forth, and commodity prices being volatile, there could be a constraint on being able to execute with favorable margins. But I presume you've done that very well. The expectations, when I read most of the notes, is that you'd probably hit a 20% margin mark, 14-15% growth mark for FY25. Maybe not a formal guidance, but are these believable numbers?
I believe so. Our aspiration has always been to grow at 2x of the GDP. So if the GDP is growing at somewhere between 6 to 7%, then we should be able to do 12 to 14% very, very safely, mainly because not only is the power generation market demand strong, but our other segments in Cummins India, segments such as defense, marine, mining, construction, all of them are also moving at better than 2x of the GDP. So the combination of all of those certainly lead me to believe that we will be able to continue to grow at that kind of growth rate.
Well, we wish you all the best for that and more, Mr. Ram. It's been a pleasure talking to you all these quarters. I look forward to, of course, meeting you soon. And thanks so much for taking the time out today.
Thank you.
And viewers, thanks for tuning in to the conversation with Cummins India.